Good morning. It's Friday, people. Friday. It's my third favorite F word. Financials, of course, being number two. It is Financial Friday. As stated last week, we typically do classes this time of year for small businesses to get on track, make sure we're ready for taxes, address any strategies we can for the current year with a little time before end of year. So because of COVID and all kinds of reasons and things, availability, we are just going to get this out on social media. So over the next few number of Fridays, we're going to kind of break these down into bite-sized bits to go over what we would typically have as our classes. Classes referred to, are you using your F word correctly? And that is the financials. Small business financials provide a lot of pieces of information. We need it for tax planning and understanding where we are on taxes. Audits are coming. The IRS, the Department of Revenue's put out a lot of money through the pandemic, and they're coming to audit people. There's a lot of funding and resources going into task forces to come audit small businesses. And so our financials give us the clarity and the information we need in that process. Sales tax, a lot of compliance changes and things happening there that apply. Currently going through Congress is the Build Back, what is it called? The Build Back Better Act. Next round of tax changes. Keeping an eye on this. So far, it's looking decent for small businesses. There are some higher end things, but these changes are going to play into what you should be doing and where you're sitting, planning for next year. So again, understanding your financials gives us that clarity. Should you be an S Corp? How are you structured? Becoming an S Corp and structuring your business appropriately is one of the number one tax saving strategies you can do for yourself. There are different rules and different things you can do under each of those. And knowing what your financials are is going to tell you what you need to identify when you should be that S Corp or what is going to be best for you in terms of the planning for your business. It's one of the number one things we do with our small businesses in terms of cutting taxes. So, and in addition, I mean, it's how we scale. Our financials are needed for, the government agencies, our tax planning. But if you keep your financials up real time and you understand how to read them, they will tell you how to make more money. Right? And if you're one of our clients, our commitment, our guarantee, if you follow our process, is that you are always tax and audit ready. And what that gives you is the ability to every month, you want to go buy something, start a new service, hire employees, fire employees, change strategy. All of the information about how you are making money is identified in these statements. And if you do it on a regular basis, you can use them for operating strategies. And that's what we do as CFOs. Okay, so that's a lot of information and a lot of things to take into play. The number one thing we got to do to get the answers, to look at all of those, to apply all of those things to our business is understand where our financials are. Okay, that is step one in strategies, tax planning, applying all these changes, getting through an audit, okay, is getting it cleaned up and understanding where you are. Okay, so to kick this off, the first tidbit, the first thing we need to do, if you're going to follow us, if you want to apply all these things, follow us through these next Fridays. If you join the CFO Collaboration Live group, you can get notifications of us sending these out. But to do that, to get all the value out of what we're going to go over, we've got to have a couple of pieces of information. So we're going to start with our profit and loss. Okay, the income statement or the profit and loss statement is one of the key financial statements that a small business owner needs. And so I want to quickly go over what it is and what it isn't. And if you can take this information, there's a link in this post for a generic income statement. If you have a system or if you're a small business owner who maybe doesn't have financials, you can use your banking. Okay, take your bank statements and you can start to put this information together. Okay, if you're a larger business, you already have financials. I think it's an opportunity to make sure you are posting and structuring this correctly so it's giving you the right answers. Okay, shit from shit is shit. And if you have bad financials to go make decisions off of, you're going to get bad decisions, right? Bad results from that. So what is the income statement? Okay. Income statement is a report that gives us data for a period of time, okay? A month, a year, a quarter. Okay, that's different than some of our other statements. It's a period of time, and it tells us our income and our expenses. Okay, that results in our profits, right? So the calculation, again, it's in the link here, but income minus cost gives us our gross profit, minus expenses gives us our net profit. Okay, and understanding these key pieces is going to give you everything you need to apply the tax strategies, how you're structured, the changes coming up, all of the things we spoke about. Okay, how to scale your business. All right, so the first part of an income statement is income. Okay, income is what you make off of your products or services. Seems simple, right? Well, what isn't income, I think, is maybe the greater question here. I see a lot of people that come to us with existing financials who are putting things in income that aren't income. And it throws off your strategy planning, and it throws off your taxes. So what isn't income? Income is not sales tax. Okay, if you have to charge and collect sales tax on your products or services, that is not income. Okay, now if you happen to be paying them out and putting both the in and out of those, your net result will be correct, but it's going to throw off your margins when it comes to operating strategies. Okay, so we don't want your sales tax in your income, right? The state gives us a little bit of money back each time we file. That is income, and we'll get into that when we go over sales tax. But the sales tax you collect on your products and services is not income. Money that you give your business, investments, you need to cover costs, you're getting started, that's not income. Okay, EIDL money is not income. Loans from your bank or whomever is not income. Okay, so we truly want the income portion of your income statement to be just the revenue, the money you're making off of your products and services. Okay, the second part is our cost of goods sold. Cost of goods sold is the direct costs of doing business. Okay, if you're selling websites, maybe you need to buy the website or the hosting, or there's some kind of fees to that. Those direct costs you need to make that revenue. Okay, so all of those costs are deductible to your company. Okay, your cost of goods sold, your expenses are going to start to create what's deductible. This reduces our taxable income. And then as we go through this series, how you're structured, we have other opportunities for reducing that even further. Okay, so your cost of goods sold should be direct costs related to income. And the more income you have, the more your cost should be, and so forth. Right? But if you make no sales, you shouldn't have any cost. Okay, so that's what your cost of goods sold portion is. So we want to go through everything you've purchased for the year. Okay, if you're a super small business, you're a micro business, you're just getting started, you need to make sure everything is running through a bank account. Okay, now if you don't have a business bank account and you are not an LLC yet, I recommend waiting to get it until next week's segment to identify if you should have an LLC, because you want that before you get your business bank account. Okay, but the short of that is everything you purchase, you want to run through one account if possible. Okay, it makes it easy to track. It makes it easy for auditing, right? Especially if you're an S corp, you need to keep that stuff separate from your personal. Okay, so cost of goods sold, income minus cost of goods sold gives us our net income, or excuse me, our gross income. Okay, the last part of the income statement, or excuse me, the next part is our expenses. Okay, expenses are everything else that we need to purchase. Our overhead, it's the lights, the rent, the utilities, your advertising and marketing, your computer expenses, your travel, right? All of those things are the cost of doing business. Those are called our expenses. We get to deduct those off of our income to reduce how much we owe in taxes. Okay, mileage, home reimbursement, there's all kinds of other deductions, but that depends how you're structured. Okay, so after next week's segment, we can really apply the extra things that you can deduct besides the obvious expenses. Okay, at the bottom of your income statement, we have other income and expenses. If you have capital gains, if you have credit card rewards, these are other sources of income. We don't want them at the top because that skews our strategy, our scalable, the profitability of what we're doing, that skews those numbers. So we want those types of income at the bottom. It still applies to what you owe in taxes, but we don't want to know the income on a house you sold when we're trying to determine our gross profits on what if a service we should be providing or not. Okay, so That is the breakdown of the income statement. Financial Friday, we want to take that income. If you can get that information, go through the link, apply these things to you, take that information, follow us through these Financial Fridays. I will make sure you're audit and tax ready. You can get the strategies you need for your business in place before the end of the year to take advantage. Okay. Paying taxes sucks, guys. It can hit a business. It can be detrimental to a business. If you're not paying attention to these things, you're going to pay way more in tax than you need to. Okay. So income statement, profit and loss, whatever you call it, it is a key piece to your business that you need to know and to move forward. It is September going into October. You need to understand your profit and loss for the current calendar year from January till now. You want to go get all of your income, all of your costs, all of your expenses put together so we can get that bottom line number. That bottom line number is what we're going to use to figure out the rest of these pieces we spoke about. Okay, so Financial Friday, get this information together. Follow us over the next couple weeks. Again, if you want notifications, if you want to stay up on this, search the CFO Collaboration Live group, join it, and each time we put these out, you can get a notification and stay up. Before you know it, you'll be ready for your end. All right, guys, thanks a lot. Echo Bell, Bell Solutions.